Well, there's another challenging aspect of owning a home because of the rising homeowners insurance cost. On top of that, there is higher property taxes. I just saw an article in Texas. The lawmakers are trying to put in 10% hike, annual hike, make that possible. And I just saw this article that says the new affordability crisis. It talks about property taxes, insurance premium, special assessments, insurance deductibles, parcel taxes, and repairs, and making a big balloon. And it's making homeownership much tougher than before because HOA fees, the homeowner association fee, or property taxes, and in this case, homeowners insurance, going up $2, $3, $4, $500 a month more, making the monthly payment even go higher, sometimes double, which is a big problem. And welcome back to Shawn Realty podcast here. This is Shawn, the realtor guy. So it says property taxes keep growing because of as homeowners' values increase, so do property tax collections. It seems reasonable, but the rate of increasing is what's concerning. Research by Atom shows that the property tax revenues increased 5.4% from 2019 to 2020, despite the pandemic, 1.6% in 2020, and in 2021, property tax collections rose by 1.8%, and another 3.6% in 2022. For 2023, the increase was 6.9%. So in 1 year, 6.9% of property taxes increasing. It's making a lot less affordable, especially for those who have been in the house for a long time. They may be older generation, they may have paid off the mortgage, so the monthly expenses is property tax and insurance and some minor repairs. But in this case, for those folks who are retired, living costs is going to be much tougher. And the other part, the double whammy, is the property insurance. It says a 2024 study by the Consumer Federation of America found that just 7.4% of all the residential properties they're not insured. So every 7 or 8 homes out of 100 homes are not insured. And it says premiums for owner-occupied properties increased 18.2% during 2022 and 2023, and 33.8% during 2018 and 2023. So we're looking at pretty much like 20% during the pandemic. And if you include from 2018, almost 34% increased. And it says the typical homeowner's policy cost $23.77 in 2023, just about $1,800 in California, and about $11,000 in Florida. In some cases, property insurance costs are now larger than monthly payments for the mortgage principal and interest. They're talking about the climate change, how insurance companies are losing money, and the payout of the claims are much bigger, which are the reason that they're saying. The other part is the special assessment. As I mentioned in the earlier video, in 2021, collapse of 12-story Champlain Towers South Beach Front condominium in Surfside, Florida, just north of Miami. This event resulted in 98 deaths, produced court settlements worth more than $1 billion, and is forcing states to adapt new inspection and disclosure standards on those older buildings. But they passed this in 2023 and 2022. Florida, residential buildings must have a structural integrity reserve study. They call it SIRS every 10 years if they are at least 3 stories high and 25 to 30 years old, depending on the distance to the coastline And this program is to identify required maintenance and repair work, then set aside the reserve to cover such costs. There's a lot of high-rise condominium buildings were built in the 60s and 70s and 80s, and these buildings are becoming like 30, 40, 50 years old now. Related maintenance cost is significantly higher than before. Well, I'll get to some points about that. The last point of this article talks about the median home size shrinking from 2303 square foot to 2177 square foot. As some of you know, I've been advocating homeownership for a long time, almost about a year also, because I believe owning your first home is a financial tool and give you a leverage the longer you hold. And one of the main key points is that buying the most affordable home. And in this case, because of the increasing homeowners insurance cost, if you buy a smaller home on a decent sized lot, the claim or the insurance cost wouldn't go as high, because I believe a lot of insurance cost is to cover the structure of the property. The land, it doesn't happen. I mean, nothing can really happen a lot of times. I mean, it could landslide, but most of the insurance coverage is to cover the structure. So my just logical thinking is that if you buy a tiny home that replacement cost isn't that high, that will lead to a lower homeowner's insurance cost. The second part is that when you're looking at a condominium that is older than 30 years old or higher than 3-story or 4-story, 5-story or higher, you may have to be careful about how much you are willing to pay for that condominium, because ultimately the maintenance cost is going to go so much higher. That's the homeowners association fee, as well as the homeowners insurance cost. Property tax is going up too. So be careful of what you are willing to pay for those older high-rise condominium buildings. And before you buy a home, I think it's important to check the current homeowner's insurance cost. When you talk to the seller should share with you what they're paying for the homeowner's insurance cost, whether they're paying for the flood insurance or not. If they're paying for earthquake insurance, that should give you a good understanding. And you want to check with the multiple insurance companies to have them compete with their cost and find a way to reduce that monthly homeowner's insurance cost. And you basically gotta shop around. That's what I'm trying to say here. I just recently heard on social media, I haven't fact checked yet, but apparently a buyer bought a property, and during the inspection period, the homeowner's insurance company said, yeah, we can cover that with X amount. After they bought the property, they have the house now, the homeowner's insurance company basically canceled the policy that they sold to them by saying the cost went up and you have to pay more. And they canceled, and when that happens, the mortgage company, the lender, can force purchase a much higher insurance and put on top of that, because when we have a mortgage, the lender really owns that property. So the lender has that right to do so. And in this case, the home buyers gets screwed, because you were thinking, let's say $200 a month for the homeowner's insurance. Like 2 weeks after you close, they cancel on that policy, and then lender puts like $400 a month insurance on top of that. When you're buying a home, I think it's really important to talk to multiple insurance companies to make sure that they're, at certain cost, that their coverage is going to be good. So if some company cancels on you, you can just go and shop and buy another affordable homeowners insurance. So my last point is that homeownership is getting harder and harder, not just the price, the affordability because of the mortgage rate, but now the property taxes and homeowners insurance. It's a tough time, but still the homeownership is a way to save some money, in my opinion, because rental will continuously go up. You don't really have to control how much you're going to be paying in 5-10 years from now, renting just one bedroom apartment. And the stability and all of that, it's definitely, I advocate for individual homeownership more than anything. So I hope that helps. Thanks for watching, and if you hit the like button and subscribe, that's gonna help my channel greatly. And if you like contents like this, please follow so you can get notified when I make videos like this. And I wish you a great day, and I'll see you soon.